everyone, and welcome to this episode of Red Threads. My name is Rob Hatchett, and I'm part of the short-term crops team for North America. I'm joined here today by Mary Kate Scruggs, our corn lead analyst, Jack Larimer covering the soybean complex, and Aaron Gertz, who focuses on North American wheat. At the end of March, the USDA issued its quarterly grain stocks report, along with the initial NASS views for 2026 U.S. planted acres. While the April World Ag Supply and Demand Estimate, or WASDE report, which is scheduled for release on April 9th, will be the last update before the agency includes new crop 2026-2027 forecasts. The quarterly grain stocks report could add a new wrinkle to the agency's domestic demand ideas for both corn and wheat. Now let's turn to our analysts to discuss S&P Global's expectations for the upcoming report. Jack, I'll start with you. Now that the soybean market has the long-awaited U.S. renewable volume obligations for both 2026 and 2027, what changes to the USDA soybean complex balances might be coming this month?
Yeah, Rob, like you mentioned, the Renewable Volume Obligation, or RVO, was released this past week, and it indicates very strong soybean oil demand through the next 2 calendar years. We expect that to, in conjunction with strong NASS crush data to start the year, lead the USDA to increase its crush forecast by 25 million bushels for 2025-2026. Now, at the same time, pretty weak export sales data and shipments data suggests that the U.S. is going to only export 1.55 billion bushels of soybeans this marketing year. That would be a 25 million bushel reduction to the USDA's forecast. So with that in mind, we think that the USDA will take crush up 25 million bushels, exports down 25 million bushels, and keep their carryout flat after the data we've seen over the past month.
I see. Sounds like a pretty neutral report for soybeans, but could be some interesting changes within the soybean products. So, Mary Kate, turning to corn, last month the USDA kept its U.S. export forecast unchanged at 3.3 billion bushels. Are you expecting any changes to the USDA's latest export projection this month?
Not in this report, Rob. Export sales for the U.S. have continued at a fairly strong pace. That said, census data is suggesting a slight downside. However, USDA doesn't typically adjust their U.S. corn export forecast in this April report, probably just because of the timing of the report. Out of the 7 of the last 10 years, they have left their export forecast unchanged. So although we see some slight downside to this figure, we're not anticipating that USDA will adjust it. On the other hand, we do believe that the agency will be adjusting their ethanol use forecast lower. Monthly data is suggesting a very strong conversion rate of corn into ethanol, as well as greater sorghum use in ethanol production. We did not see the agency make this change in the March report, so we are anticipating that USDA will lower its ethanol use forecast by 50 million bushels in this WASDE.
Turning to the March 1 corn stocks, does this latest data point signal any changes to the agency's forecast for feed and residual corn use?
Yeah, just a bit. The latest March 1 corn stocks figure did come in below market expectations, and that indicates greater than expected use over the second quarter of the marketing year, and most of that is coming from feed and residual. So although the agency was starting with a fairly high feed and residual use forecast, we do see some upside there. So overall, potentially 25 million bushels higher to their feed and residual use forecast. And overall, for the April WASDE, offsetting changes with lower ethanol use, higher feed and residual use, we could see a slightly higher carryout from the USDA, around 25 million bushels for the 25-26 marketing year.
All right, great. And over to you, Aaron. Regarding U.S. wheat, the agency also kept its U.S. wheat export forecast unchanged in the March update at 900 million bushels. Have you seen anything in terms of overall demand for U.S. wheat that might prompt the USDA to change its export forecast this month?
No, Rob, we're not expecting any changes from the USDA and their export forecast. Inspections do remain ahead of the average pace needed to reach their forecast. However, sales slowed dramatically this week, and we expect that to continue in the upcoming weeks. USDA has been conservative throughout this whole marketing year, leaving their export forecast unchanged, and we expect that to continue in this upcoming report. Looking at the rest of the wheat demand balance sheet, we also expect no changes. The grain stocks report came in right in line with our expectations and with what the USDA's demand numbers implied, so not expecting any changes there either. Overall, we're expecting no changes to the U.S. wheat balance sheet, so it's going to be a pretty quiet report for wheat.
Yeah, sounds like it. And I guess with the wheat market, all the focus is on the crop prospects for the hard red winter wheat crop that'll be harvested here later this year. So we'll see if there are any material changes in the upcoming May report when we get the first view of that crop. So, all right. Thank you all for joining us this month, and thank you to our listeners. And we'll be sure to catch you next time.